am Jean Sullivan, and I am proud that I've been part of the Arcview team for many years. And with Jeff Finkel, someone you'll meet shortly, I co-manage an interesting and very diverse early stage fund for Arcview. We've made 22 cannabis investments. Now, let me take just a minute to update you on who and what is Arcview today. Many of you are asking us, so we want you to be able to access our talent and connections as needed. For more than 10 years, Arcview was the go-to place to meet entrepreneurs and investors. And the community invested more than $350 million in just about every cannabis company you can name. I'm so proud of that. And even though COVID halted our events, we still produced over the last several years, especially since COVID, many webinars on important subjects like today. And so the inbound phone and emails have continued throughout the years, seeking our help. Can you help me do this? Can you help me figure out my business? So it's important for Arcview to stay up with the times. So we've been building Arcview Consulting, and we serve many operators and entrepreneurs today with strategic advice, M&A, connecting CEOs to our many resources, and helping operators kickstart their stores or operations. We can help you first apply for a license, of which we've won several state licenses, and then help you fast start your business, your store, your cultivator, your grow, your processor with some real pros that we have met throughout the years. And we are actively seeking licensed CEOs and teams to support, delivering SOPs as needed, etc. Executive coaching, of which Jeff and I have such an experience with that for many years as investors in tech, pitch deck creation, or seeking a partner acquire. We are here for you, and that's what we wanted to share. We're also recreating Arcview Capital, which is a FINRA licensed broker-dealer with a new partner, so stay tuned for more. It's happening soon. I couldn't be happier and more delighted to introduce a dynamic discussion today with some of our brilliant thought leaders and friends of Arcview. So I welcome to the stage first Scott Greiper. Scott, you're the founder and president of Viridian Capital Advisors. Scott, you launched Viridian in June 2014, so you're a true pioneer. And you had a 30-year successful Wall Street career. You're a prolific publisher of data in our cannabis industry. And Scott, for years and now and continuing, I read everything you publish because it's important to see and understand the data and trends. We'll be talking about that data today. So joining Scott today is Chris Lindsay. Scott, come on, open your video for us so we can say hi to you.
I'm still caught up in the lovely words you were saying.
Oh, thanks. Hey, listen, you can't say enough good stuff. And as you know, we've known each other many years. So we're so proud to showcase you and your brilliance and your data today, as well as so many interesting things that are going on in our business. So joining Scott today is Chris Lindsay. Chris, go on, turn your video on. Chris is the Director of State Advocacy and Public Policy at Attach. Attach is an acronym that stands for American Trade Association for Cannabis and Hemp, which is a legislative lobby group. Chris is very knowledgeable about a couple of very important things: unregulated hemp and the probable HHS to DEA ruling for Schedule 3. And with Jeff Finkel, who is my business partner as well as CEO of Arcview. Jeff, come and join us, come to the stage. You're going to hear about these opportunities today. So I welcome everyone. We want to make this interactive. That's why we thought we'd introduce everybody. And so hope to be very interactive, and it's such interesting topics that we're talking about today. So Scott, lead off, give our listeners more history on your great background, and then let's take a quick look back into 2023. So talk to us, tell us more about your terrific background.
Well, like I said, Gene, I think I'm just going to shut up and listen to you talk about me because it's better than me talking about me. But I'm glad to be here with you, Gene, and certainly with Jeff, who I've known for 30 years. Um, Interesting times in the cannabis marketplace, to say the least. As Gene described, we launched our practice in June of 14 as one of the first. We think we were the first, but we're going to say one of the first. Capital markets, M&A firms, FINRA licensed. We have a broker-dealer relationship with Bradley Woods in New York. We've raised hundreds of millions of dollars in equity and debt capital for our cannabis hemp clients. We've done hundreds of millions of dollars in M&A work, both sell side and buy side. And in January 15, we launched the Viridian Cannabis Deal Tracker. And it is today the largest database of deals that have happened in the industry for 9 years. We just celebrated our anniversary in January. So we've tracked about 75 or 80 billion dollars of every equity investment and debt lending and buy side, sell side M&A, going public, RTO, SPAC. We really dig into how deals are done in the space. And coming off of a very difficult year, Gene. 23 was a really tough year. I don't know if you want to bring up the slides or I could just talk to it. It's up to you guys. Yeah,
Bring
20.
up the first slide because it's one of the more important slides. Let's follow the money. So talk us through that.
So, 2021 was the high watermark in the capital markets of cannabis, hemp, psychedelics. The most capital raises, I don't have the 21 data here because it would have made this slide even more depressing. But reality is reality, and we have to live in reality. But 21, clearly the high watermark, number and amount of equity capital invested, number of transactions, the amount of debt coming into the industry, number of transactions and the size of the transactions in M&A. So it's difficult comps to follow in 22 and 23, considering 21 was such a spectacular year in terms of investment, debt, and M&A activity. But here are the numbers in 23. This is all stuff from the Viridian Cannabis Deal Tracker. You can see that the number of equity raises, 99 last year, was down about 31% from 22. You can see that the amount of those equity raises was down. In fact, if you look at the average size of the equity deals, transactions that was done last year, it was about $7 million on average per transaction. That's really low for an industry as large as this is. That was compared to about 12 million in 22 and to about 30 million in 23. So not only a number of transactions on the equity side down, the average check size is down. So the bigger players, the bigger equity players in the industry, not only have pulled back in number of transactions, but in the size of the check that they're writing. And that's a concern. This industry is in a growth phase. It lives on growth capital, whether that's OpEx capital to scale, whether that's CapEx capital for acquisition or to add on a new facility. The industry lives on equity. If you look at the next section here on debt, also down even more than equity, down by close to 50%. And I'll say that when debt started coming into the industry in about 2020, 2021, it was a blessing. It was so needed as a source of capital because equity was drying up. Why was equities drying up? Stock prices came down, right? The biggest capital allocators and capital acquirers in the industry are the public MSOs. And as their stock prices came down, it became very dilutive and very prohibitive for them to issue a new equity. It's just too painful. So they started issuing debt. So as I say, thank God for debt. Having said that, with the rise in interest rates up until about just a few months ago, debt became very expensive. And there is a premium, higher coupon, higher OIDs, more penalties on prepayment. Debt in the cannabis industry became very expensive. And so you had the lenders saying, I want more money, and you had the people taking down debt realizing that became prohibitively expensive. So we saw a decline in debt raises. I'll finish up.
But one of the biggest pains to us, Scott, as you well know, where's the institutional capital? And is there any hope that that institutional capital can come in?
Well, the lack of the institutional player in this market, not only in the capital side, but on the strategic side, on the M&A side, big alcohol, big tobacco, big brands, a big industry, was Monsanto. That's been an issue since the industry started legalizing at the state level, let's say in 2009, when Colorado and Washington went medical, and then 2012, Colorado, Washington, before they became the first rec states. You didn't see Constellation invest down here. They went up to Canada. You didn't see the big institutional players invest down here. They went up to Canada. I started seeing this happening in 2015, 16. It was incredibly frustrating. The business of cannabis really scaled here, right? No disrespect to Canada, but the total population of Canada is the size of California. They can't compete on scale. Nonetheless, they're a federally legal jurisdiction. And so US companies started going up to Canada to domicile up there. And why? Institutional money felt comfortable investing in the cannabis industry in a federally legal jurisdiction, so they didn't have to price in the risk of Schedule 1 down here. Or when you look at private equity on the institutional player, by charter, they're not allowed to invest in federally legal industry. So we'll get into this later, Gene. Obviously, rescheduling has so many impacts, obviously on cash flow, elimination of 280E, but it makes our industry more normal, not this draconian 280E tax that's screwing state licensed compliant cannabis operators, because the US government is saying, you're illegal, but I'm going to take a pound of flesh from you. So eliminating that continues to remove the stigma. And we hope, because we speak to private equity, we speak to big brands every day, that elimination of 280E continues to destigmatize the industry. And with the increase in cash flow, will hopefully bring in the institutional investor.
And you know more than anyone that those large MSOs are from the stage remarking how many millions of dollars will not only drop to their bottom line should they no longer have that terrible 280E, but useful for other opportunities, marketing and product development, all kinds of things that they could do with those dollars. That's exciting.
All of that, Gene, and I don't want to take away from our discussion on
Right.
Regulation and changes in regulation.
Right.
To us as a capital markets investment banking platform, it drives an increase in free cash flow and, as a result, valuations. What does that mean? Companies are in a better position to raise money and at higher valuations. Sellers, cannabis companies that are sellers, can expect higher pricing. It changes the whole dynamic about how deals are going to get done.
Well,
just to add on to that, I've heard two numbers. I've heard $750 million will fall to free cash flow. I think that's maybe the top tier 1 and maybe tier 2 MSOs, but I've also heard the number of 1.8 billion. I believe that applies to all plant touching companies. Those are enormous numbers, but what number do you think is the right one?
Jeff, the $730 million number came from us. We put out our what we call the chart of the week every Monday. And I think it was about 2 months ago, we put out a chart of the week on what are the expected additional cash flows from the elimination of 280E. That's just for the top 30 public MSOs by market cap. And it came out to 730 million.
Got it.
Well, I like your next chart, Scott. That's so interesting about, what's going on in the various states. Talk us through this.
So, early on when we started the tracker 9 years ago, we really wanted to, it's proverbial to say, but it's true, follow the money. And this industry is not only very unusual in every respect, it's not standardized right across the country. It's state by state by state by state. So right off the bat, and this is 9 years ago, we started tracking equity capital, debt capital, and M&A by legal states, because states evolve at different paces. Some states are hot because they're early in their evolution. They're limited license states. The money in the industry at the state licensed operator level has been made by investors and lenders and acquirers coming in early in the evolution of state legalization. And when I mean early, I mean at the medicinal level. So that's a lesson to be learned. We've got now 15 years of state legalization since Colorado went medical in 2009. There's a lot of lessons to be learned. One of the lessons is commoditization happens, too many licenses, too much production, and you have price competition. So you've really got to get early into these states. So we started tracking by states. So here is how capital is allocated into each state in 23. And unfortunately, you could say that every state except Arizona experienced a decline in number of equity transactions and the amount of those equity transactions. This goes along with the general theme of there's just a low level of capitalization in the industry last year. I can go into each state individually.
Well, I think
California is going to attract the most capital because they have the most licensed operators.
so. Just for clarity, Scott, on that New York number. So I know you and I have talked about this.
Yeah.
For our New York viewers, that's really for companies domiciled in New York. That doesn't imply spend for New York operations.
That's correct. And you pointed this out, Jeff, when we were out speaking at a medical cannabis event in New York. These are companies that are domiciled in New York, not necessarily state licensed operators in New York, but in order to create standardization in our data, when we track capitalization, M&A activity in a state, we're only tracking those operators that are domiciled in that state.
I predict on this chart, we're going to see a nice, good number for New Jersey. We believe Pennsylvania's coming online. Certainly, Florida's got some action on adult use. So I think those three states are going to show some very robust numbers over this year. We're seeing so much going on in those states, especially New Jersey, our
Yep.
neighbor.
Agreed.
All right.
Yep, go ahead.
No, go ahead.
No, I was going to say, if you want to flip to the slides, because I want to make sure we get.
Sure, go to the next slide, Carolyn.
I don't want to take on too much time.
This is interesting. Which sectors, are drawing investors? Certainly, this has remained constant for all the years, the top line. But tell us about that.
So again, in order to track the flow of money in M&A, we're equity investors looking, we're lenders looking, we're acquirers looking. We track not only at the state level, but by sector, right? Because these are very distinct sectors from one another. The top line, cultivation and retail, are the licensed operators. It's the infrastructure. You're growing the product in a grow, you're extracting oils, creating infused products and manufacturing processing, and you're selling the brand or the tincture or the vape at the store. So when we came up with these sectors, which was in late 14, they really haven't changed, like you're saying, Gene. The only changes we made is we added psychedelics past year, and after the Farm Bill was passed, we added hemp. Cultivation and retail, which is the infrastructure of the industry, it's where the product's produced, both flower and infused products, has always attracted the most capital because it's all infrastructure built, right? You win a license, now you got to go out and raise money, right? To build the grow, to build the outdoor facility, to build the hoop house, to build the greenhouse. And now you've got to build the manufacturing processing facility. So you got to buy extraction and distillation equipment. And the CapEx is really on those two top parts of the supply chain. It's cultivation, which you need scale and technology. It's a race to lower your cost of goods. It's a race to lower your cost of production. That's the quicksand that cultivators are in. And it's quicksand. I don't care which state you're in, it's going to happen. Whether you're a new state or you're 10 years old, you're going to face commoditization typically 2 to 3 years in. So you better factor that into your CapEx spend. You got to scale. You got to bring in technology. You've got to lower your cost of production. So the cultivation retail has always attracted the most money. They have to. But their share of investment is at its lowest level. For a couple of reasons for that. Investors, lenders, acquirers are seeing that this is a very diverse asset class to invest in. It's not weed and bonds. It's real estate at the core. It's infused products, so you need really good extraction distillation equipment, right? It's brands, it's vapes, it's cartridges. That's the infused product side. Software and media. The 3 of the 4 deals that we tracked last week were software deals. So companies, as they improve in their governance, in their management, in their financial controls, they're also improving in the way that they track their business, and that's software. So you're seeing much more of a diverse. I think this is really healthy for the industry. Much more of a diversity of where investors and lenders and acquirers are placing their bets.
Sure.
We can go through all of this. I'll just point out 2 quick things. Psychedelics, although the number of transactions year over year was down, it's only 10%. Psychedelics have really been where the institutional investor, the biotech funds, the healthcare funds, the pharma funds have placed their bets, because the majority of psychedelics companies are R&D drug development plays. I think there are more than 50 FDA compliant clinical trials out there trying to determine the efficacy of specific compounds of psychedelics. But where we were betting on, and we were as a firm, we financed one of the largest medical cannabis companies in Israel several years ago. They were running clinical trials. Psychedelics has usurped, completely leapfrogged the medicinal hope of the plant. It's now gone to psychedelics because it's not a Schedule I drug, it's FDA compliant, and it's attracted institutional money at a much greater rate than the cannabis industry is.
Fascinating. All right, what's the next slide?
Yeah, let's jump through so we get others involved. Once again, tracking by states, but not by capital, but where are the acquirers looking by state? Again, California is always going to be the largest state because it's got the most operators. So there's always a turnover of companies, and unfortunately, and I think I saw this stat almost 9 months ago, 71% of the licensed operators, again, this is the beginning of last year, maybe the end of Q1, 71% of the licensed operators in the state whose licenses were coming up for renewal were not renewing. They were going away. Why were they going away? It became too hard. They were in quicksand. They were fighting a constant chase to the bottom on pricing, number one. And number two, they weren't raising capital. They were undercapitalized. And if they were attracting capital, they were getting smoked on terms. It was a down round. So it just became incredibly, incredibly painful. You have some states that saw increases in M&A, Arizona, Maryland, New Mexico. There are certain reasons for each of those. But I agree with you, Gene. When you look at Florida, they only had one less transaction in 23 and 22. That's in the hopes of legalization. Maryland's a hot state, a newly legal state, similarly. So we're starting to see some action coming into states that, although massively delayed in terms of going medical to rec, you started seeing the legislature begin to prepare for that. And we're seeing acquirers wanting to take positions in those states.
Can you give us some comfort that things are better in 20 this year?
There is comfort. Maybe let's finish up on the slide, guys. I want to open this up.
Yeah.
The comfort is, number one, public stock prices, particularly the top 30 MSOs. When I say top in terms of market capitalization, the public guys, let's get rid of the slides. Let's just open it up to everybody.
Yeah.
Higher stock prices mean that companies are more willing to issue equity and go into the equity capital markets. We saw that right after the HHS announcement. There were like 4 or 5 equity announcements. We hadn't seen an equity deal for some time. But right after the first HHS announcement, I guess maybe 6 months ago now, 5 months ago, stock prices rose like 80%. Companies are in constant need of capital. They started going to the capital markets and raising equity capital. Since the beginning of the year, I should say the first trading day of the year, we've seen a resurgence not only in stock prices, but in volume. And for those of us who've been in the capital markets for 1,000 years, upward movement in stock prices without increasing volume is weak. It's likely that that's coming right back down at you. So increasing price with volume shows new investors coming into the market, and that increase is somewhat supportable. So I think the equity side of the house is going to be better this year than it was last year. Real quickly on M&A. So who are the principal acquirers in the industry? It's the MSOs. They're in the business of M&A. That's what they are. The strategy of the MSO has changed from, hey, let's buy everything in 2018, 19, 20. That's gone. Market's not supporting that. It's much more targeted, specific states, only buying accretive acquisitions, whether they're buying revenues, profits, IP, brands, whatever it is. It's got to affect their core business. So stock prices are higher and they're buying more companies. But the valuation gap between the top 30 MSOs and the next tier down in the public MSOs and the private MSOs is at almost near records. And Jeff, you know this, you're a student of this. M&A is always, traditionally M&A is done public company buying private company, not just cannabis, any industry. Why is that? There's a natural arbitrage. Public companies typically have higher valuations because they typically have an easier way of raising money, and they offer investors the hope of liquidity and get out. Versus a private company, you write a check and now you sit back and go, okay, they either have to be sold, somebody's got to take me out, there's got to be, how the hell do I get out? So there's always typically a higher valuation to the public company and a lower valuation private. And the MSOs have played that gap spectacularly for years, almost in entirety up until the last year and a half. MSOs have always bought private single state operators because they had that arbitraging value. That's back. It wasn't there up until the HHS announcement. The public MSOs, the top guys were trading at or near 52-week lows. So they didn't see that gap between where they traded and where the private companies trading. That gap has expanded considerably. So it induces the public MSO, who now have higher stock prices, more ability or more capability to raise equity capital, to start making more aggressive acquisitions. So we are anticipating an increase in M&A activity this year.
Well, that's hopeful, and stay on, because now we want to turn our attention to the possibilities of this rescheduling, Schedule 3. Scott, everything you said is certainly in line with the last 4 years of chaos, COVID, worldwide disruption, domestic political unrest, and a do-nothing Congress, disappointingly. Do I have to remind everybody now that the locusts are coming in April? So I thank you for what you shared with us, but stay on so we can now continue to discuss this. Jeff, over to you and Chris Lindsay.
Thank you, Gene, and thanks, Scott, for this great numbers. So one thing I would say, we're actually seeing a little bit, actually a little bit more than a little bit, of M&A activity of newly minted licensees have leases where money that would typically be minority stake equity money, usually from people outside the industry, because people inside the industry have a portfolio they're digging out of, but they're coming in looking for control stakes and to buy the whole thing out. So we're actually seeing a lot of that activity on sort of the low end of the market. But anyway, great data. Always great to have you walk us through your slides and the data you collect. So now let's go a little bit deeper into the regulatory environment at the federal level. Chris, welcome. Why don't you first tell us just a little bit more about Attach? And I also want you to share with us your unique and compelling personal story.
Well, thanks, Jeff. And yeah, it's a story I don't often share. I don't like to toot my own horn, but it's a bit of drama. So let me start with Attach. So Attach is the American Trade Association for Cannabis and Hemp. We have, for the most part, it's state licensed cannabis and marijuana businesses, and we also have folks that are in the hemp sector, and by and large these are folks on the beverage side, and it's a real pleasure to be part of that organization. It's exactly the kind of trade association I think we've wanted and needed for many years. It's been at it for a while, and it's taken a real leadership role in some key areas. One is in rescheduling. and another is in responding to unregulated hemp-derived intoxicants. And so I've been very busy, particularly in the latter, although there's been a lot of lobbying really across the board. I'm a road warrior this week in places like Tallahassee in Florida. Right now I'm in Phoenix in Arizona. Next week I'm going to be in Columbia in Missouri. And probably circling back around to Indianapolis. And these are all places that are dealing with this issue of unlicensed or unregulated hemp-derived intoxicants. So there's a lot of action right now, and Attach is a great outfit if those are areas that you're focusing on in your business. So in terms of my history, I've got a colorful one. Let's just say I started back in the early 2000s as a trial attorney. I was doing criminal defense work, and I started having people coming into my office. It was pretty humble beginnings. They were coming to my office saying, "Hey, I'm a medical marijuana patient, and I got in trouble with law enforcement. You know, what do I do? How do I get out of this?" And so that was really just kind of how I stuck my toe into this topic. Just a couple of years later, I was actually diagnosed with Crohn's disease, and I was hospitalized for many, many months. And I was enough of a lawyer to know that I wasn't going to get in trouble talking about my own personal use of cannabis. And I said, you know what, I'm a recreational marijuana consumer. We didn't know what was wrong with me at the time. I didn't want to leave any cards off the table. So I told them about it. And about a month or so later, they came back around and they said, okay, we figured it out. You have Crohn's disease. And we've been confused about this because you're a lot older than people who typically show up with this disease. And we think that you've probably been self-medicating during this time. And I thought that was pretty interesting. A few months later, when I was finally out of the hospital and back on my feet, I went back to them and I said, all right, I need to be a medical marijuana patient here in this state. I can't get in trouble with this. I've got a wife and a kid. And to my surprise and shock, none of those doctors would actually sign my certification form. And that didn't make any sense at all to me. I mean, these are the very medical professionals who came around and said, this has clearly been helping you. Well, it was because they were afraid of the DEA, that they would lose their ability to write prescriptions. And that really put me at that point on the path to advocacy. Well, I started going to my state legislature, just talking about Montana's medical marijuana law, which was frankly terrible. And like a lot of the early laws it passed, it was really more about providing protections for individual consumers. It really didn't speak to the industry, how you could actually operate a business. And so that's where I focused my attention. After a few legislative sessions, I got to know other advocates, and we started to look at each other and say, you know what, we could start a business. We could probably do very well with this. I have an entrepreneurial streak, and I thought that was a great idea. I knew local law enforcement. I knew all the judges. We thought we could be pretty professional outfit. So we formed a company. And this was just leading into Obama's first term. So he was on the campaign trail during this time. And we heard him loud and clear when he said, hey, if you're clearly following state law, I don't think that's something that federal law enforcement ought to spend a lot of time on. And we took that to heart. So we formed our company and said, we're going to be in clear and unambiguous compliance with state law. And that was kind of our mantra. And so that was the direction we headed in. Unfortunately, DEA didn't quite see it that way. And my business, along with about 28 others, all got raided about a year and a half after we got started. All those raids happened within about a 2-hour period. And I'll tell you, nothing will change your perspective on federal attitudes more than seeing your employees zip-tied outside your building while federal officers in hazmat suits are clearing out your facility. And so I tend to be pretty conservative now when I start crystal balling where we may go and how the federal government feels about things. But at that point, that was basically the end of my my practice as an attorney in Montana. I really turned full-time to advocacy. So I started working for Marijuana Policy Project. That was a 10-year stint doing work at the state level. I worked in a lot of different states around the U.S., but the one I'm sort of most proud of, I think, just because I got all three helped see medical marijuana across the finish line. Then we addressed personal amounts of marijuana possession to decriminalize that. And then finally, we brought in the full legalization program for adults. So at that point, I started working on the federal stuff, and that's what gets me here today.
I can only imagine the pain that you went through that. And what can we say? I think we're all here in this room as advocates to free the plant and putting our time, energy, effort, and money to do so. But look, there are a lot of regulatory initiatives in front of us for 2024, all of different varying degrees of importance. Rescheduling, maybe we should even talk about descheduling, given the Warren Fetterman letter came out the other day. The Farm Bill and the explosion of hemp intoxicants, as you mentioned before, and I know you're focused there. The Garland memo, or as some refer, the reincarnation of the Cole memo, the States Act, safer banking. So all of them on the table. Let's start with what I think is the most impactful, will have the greatest effect positively for the industry, and that's rescheduling to S3. So can you walk our audience through the process step by step of what has to happen to get this decided and, more importantly, implemented?
Well, you've raised a great point, and that is certainly the bright spot right now in this whole morass of different proposals and things kind of circling around. Rescheduling would have the quickest and most positive impact, I think, of all. This process really started when President Biden pardoned folks that had been saddled with convictions at the federal level. And along the way, he kind of sort of wondered out loud, is Schedule 1 really the right place for marijuana? And then sort of called out how unfair it can be to a lot of folks. And that really kicked off an administrative process. So very often when we're talking about Washington, D.C. and all the different bills that could potentially change the landscape, those are all animals of the legislature. And we all know how dysfunctional Congress has been. And so that can be a very, very long row to hoe. The administrative process, though, is completely different. And that process then was kicked off. And the DEA, Drug Enforcement Administration, really has the ball when that is the topic. And they consult as part of that process with Health and Human Services, which, of course, houses the FDA. And we found out, I think last August, what the FDA and then by extension what HHS actually thinks about all this. And I think surprising quite a few people, they came back and said, you know what? We actually don't think Schedule 1 is the right place for this. We think Schedule 3. Well, that's a pretty big deal, and for a number of reasons, but I'll cut right to the chase. It's not necessarily going to change the landscape significantly for where recreational or medical marijuana businesses operate. They're not suddenly going to be compliant with federal law. The FDA is probably still going to have issues with these products that get produced. But what changes in a big way is how the tax code applies to these businesses. And it's because of a one-off law that was passed in the early 80s called what we call now 280E. That's not about how the Food, Drug, and Cosmetics Act works, which is kind of how all this regulatory framework lives around these businesses, but rather it's in the tax code. And it says specifically that if you deal in either a Schedule 1 or Schedule 2 drug, that you can't avail yourself of the tax benefits that come from operating in the United States. So you can't write off business expenses the way 99.99% of businesses that operate in the U.S. do. And that means that if you sell something like marijuana, you're actually taxed on your total income, not an amount that takes your business expenses, for the most part, into consideration. And so just by virtue of the fact that the schedule would go from 1 to 3, actually removes these products from that really severe law. And so we'd still be sideways with the FDA for the most part, but we would no longer be under the thumb of the IRS the way we are today.
And that's why it's critically important. But what I think our audience wants to know is the process from here. So Biden administration tasked the HSS to make a recommendation. They made it. DA has to act on it. What's the process? There's a comment period. Can we talk sort of a little bit about the timeline about what's possible?
Sure. So HHS obviously has made its recommendation. Now we're waiting for the other shoe to drop, and that's what is the DEA actually now going to do in light of that recommendation. And they have a road plan that's been established by them. They have 8 factors to consider when they're trying to decide whether or not it's appropriate to move a drug from one schedule to another. We think, based on the experts that we've talked with and folks that are in touch with the administration, that they are very likely to go with Health and Human Services recommendation. Now, the timing on that, we don't know. The best estimate that we've got right now is we think it'll be in the first half of this year. And so what everybody's doing is they're watching the Federal Register, because that's where this announcement's going to be made. And once that happens, it will then kick off a public comment period. And so there will be public comments in, and then following that, they will have their determination. I expect there will probably be legal challenges that will follow that, because that's where often these things go. And then sometime after those legal challenges is when we could expect that law to be considered final. One thing I would just mention, and I've gotten this from the experts, is you've got to continue to pay your outrageous taxes until we reach that point, because the IRS definitely knows how those butcher's bills add up, and they will continue to add up until the law actually changes. There is a possibility that they may just waive previous debt, but I think that that's unlikely, and it's highly speculative to operate that way.
Yeah, I think so too. But I want to move on to some of the other topics. But just before I do, is there any sense for how long the comment period is?
I'm not the expert on this, but I think it's a 30-day period.
Okay, good.
And Jeff, can I ask another question on the timing? Speaking to lawyers all the time about this, some of whom seem quite tied into the Biden administration and the FDA, DEA. Outside of the comments period, Chris, from what I've been told, in other rescheduling, not cannabis, but other rescheduling that the DA has enacted over time, it takes on average 9 months, maybe up to a year, for the actual rescheduling to take effect, not the comments period, but the actual change to the CSA, the Controlled Substance Act, for other substances that have been rescheduled has taken between 9 months and a year. Have you heard that? Is that the case?
I have heard that. Of course, we don't know in our case, because I think a lot of this is driven by politics. Keep in mind, this all started with over at the DEA, it's your boss's boss. So Merrick Garland's boss, President Biden, sort of leaned across the desk and said, maybe we ought to see a change there. What do you think? And so I think that might impact where a lot of these go. And by the way, the FDA's own recommendation came along a lot faster than typically we see when they're evaluating where the schedule ought to be, and they kind of reverse themselves even on their own previous call on this. So I think we're outside of the normal framework that we would see when it comes to drug reevaluation, and I think to a large extent, this is probably more me than others. I think it's driven by a lot of politics right now.
I'm willing to bet that if there is a 6-month period to make it effective, which puts you into 2025, where it's sort of the tax relief won't be experienced until that calendar year. I think all of the things that we're expecting in anticipation will happen before it's effective once it's approved. For example, the multiples will go up, budgets will get sort of extended again, and there'll be optimism in the industry. You'll see some more institutional capital come in, because it's just now a waiting period, and sort of risk of it happening will be minimized. But let's move on to the Farm Bill. I've got a lot of opinions about this. I mean, I get it. It makes sense for brands to exploit this area that's not perfectly covered in the Farm Bill and sell hemp-derived intoxicants direct to consumer on the internet. It makes a lot of sense. They're going to get the full margin. They're going to get direct relationship with their customers. They're going to get direct data that they would have otherwise had to try to extract from the channel. makes a lot of sense. On the other hand, it's quite a slap in the face to the regulated channel, right? Those guys have higher operating costs, they got the regulatory burden. And of course, this is all in the Farm Bill. What do you think about the next version of the Farm Bill? Will they close this up and prevent the sale of these intoxicants over state lines or even at all? I've talked to so many people about this, and I've heard, no way, the cat is out of the bag. Nobody cares. The Farm Bill is all about making farmers more profitable. They're not thinking about the effect of cannabis operators. And I've heard other people say, no, it's too small. This part for farmers of hemp is too small in the overall notion of the Farm Bill that they are paying attention and they're very cognizant of what it's going to do to the regulated channel. What are your thoughts?
One thing that was definitely the case is when Congress did make this change in the Farm Bill, in the 2018 Farm Bill, they were real careful to say that this was not about legalization. There was a lot of concern that this would somehow inadvertently create conditions for legalization. And so lawmakers are not happy at all that now suddenly, and I mean, when I say lawmakers, I mean Mitch McConnell on down, that now suddenly we have not only this sort of weird quasi form of legalization, but that we have actually inadvertently led people to believe that synthetic versions of these drugs are somehow okay. At the same time that the administration is trying to reschedule natural cannabis, you've got an industry that's sort of run away with the narrative that they're suddenly now legal. And the reality of the situation is the DEA definitely does not consider these products to be legal. They consider them to be analog versions of THC. They're Schedule 1 on their own right. If Congress, or rather if the DEA reschedules marijuana, that will not affect hemp intoxicants in any way because they're there for a different reason. It's because they're synthetic drugs. FDA definitely does not consider these drugs to be legal. From their perspective, they're adulterants when they show up in things like gummies, and they're not even legal to go across state lines. And so we believe that lawmakers are very concerned about this. They drive to school, they drive to work, they stop in the gas stations, they see these products on the shelves, and they're very concerned. Especially when you'll get a real high potency candy that's obviously aimed at a kid and it says Farm Bill compliant. So that's a shock to a lot of lawmakers. And I think they're going to spend some time in the next Farm Bill to clarify that, first of all, that was never their intent. Secondly, states are and should be in a position to be able to regulate this stuff. And I think that there's a lot of momentum in that direction.
Got it. All right. A topic that's been just beat to death. Safer banking. House has passed, what, 7, 8 times? It's even gotten to committee most recently in the Senate, never had before. Now, I could ask you whether or not you think 2024 is the year. But you know what I'd rather ask you? Does it matter? Does it matter?
Well,
most people have banks. They're using banks. I get it. The credit card rails are off limits. Is it going to end up just a statement that the legislative branch can get something done and it's more form over substance? Or do you think it has substance? And maybe I will sneak in and ask you if you think it will happen.
Well, I think you're largely correct that this is, for a long time, it's been more of an exercise in, can Congress talk about this subject and pass a bill? For the most part, this bill is aimed at not even our industry. It's aimed at financial institutions. And so it's sort of an indirect benefit. And I think to your point, the banks and lending institutions that would get involved have gotten involved. You don't really hear, and I certainly don't know about any banks that have gotten in trouble because they were banking marijuana businesses. And so providing them a safe harbor, it's kind of hard to say how that's really going to change things. But at the same time, two things I think would happen. I think there would be some banks that probably would move in this direction that haven't yet. And I also think that the public perception of that is to say, look, here is yet again an example of how we continue to move in this direction. It's probably going to provide a lift in the markets. And of course, I would defer to Scott on that, but I have to think that it wouldn't be bad news for those in the industry to find out that this bill passed. In terms of timing, I think we have a real steep hill to climb, because it's true that it's passed umpteen times out of the House. That's great. We're now in the Senate, so the Senate version of this bill is now safer banking. But we have a much different political landscape over in the House. And so it's not clear to me exactly what that pathway is going to look like if we do make it out of the Senate.
Yeah.
Yep.
All right, look,
So,
I want to leave a little time for questions, but let me just get your quick opinions on two quick things. The States Act, right? It was reintroduced in the 118th Congress in December. The Garland memo, the reboot of the coal. What are your thoughts? Is there any momentum? Is it important? Does the Garland memo kind of create a little bit more safe harbor sort of on top of S3 to adult rec providers to give them just a little bit more sort of comfort around, their compliance with federal law? What are your thoughts about those two?
Well, so the Cole memo is a legendary letter that was basically issued by the Department of Justice. I think it was back in 2012, and it basically kind of just said, here's how we're approaching this at the home office of the Department of Justice. And it sort of outlined really what is prosecutorial discretion to say, when is it that we consider this stuff serious enough to put resources behind shutting down states or the businesses that operate in them? And that really became the roadmap for a lot of states, a lot of businesses, and the different regulatory agencies. And there were other memos that were written based on that, by the way. FinCEN put out a memo for the banks, and that's where we're seeing, the if SAFE or SAFER were to pass, it's going to kind of speak to a lot of the issues that were raised in the FinCEN memo. There was one on Indian country, about how the federal government would deal with this stuff on Indian territory. And then comes top U.S. Attorney Jeff Sessions, who really did not like marijuana at all. And one of his early acts was to basically rescind that memo. But for all intents and purposes, we didn't see a change in the way that regulators managed all this stuff, because it's frankly sensible, and kind of hard to imagine a different scenario without the federal government just simply starting to try to clamp down on states in some way or another. So yeah, the memo technically went away, but I don't think anybody stopped operating according to its provisions. And so here we now have the prospect of maybe going in and let's reboot that memo. Okay, good stuff. Again, I think it would be a tremendous lift to the market. I think it would send an important message on behalf of the federal government, but I'm not sure, until we can change the law and not just be in prosecutorial discretion world, I'm not sure how much that's really going to change the way we all have to operate.
Understood. Hey, Carolyn, let me invite you back on stage here, and maybe you can read some of the questions.
Sure.
For Chris and
Hi,
Scott.
everybody. Great conversation. Covered a lot of ground. I know we only have 4 minutes left, and we'll try to keep it on time. I know there's a lot more that
We're going to
people
go
have
over
asked
5
in the
minutes.
chat.
It's okay.
That's okay. So, and then we can also continue to answer them in social media after, if we don't get to all of them. Okay, great. So the first question that came in, and feel free for anyone to chime in, from Jules, from the limits set of transactions, on what basis are companies being valued currently? Multiple of revenues, multiple of EBITDA, limited set of transactions? Who'd like
I'll
to
jump
jump
in,
in?
Carolyn. So when we value companies, which is an important part of our business, we really take kind of 4 vectors at it. Discounted cash flow, which really takes into account the EBITDA or the free cash flow that companies generate, and then applying some discount rate. We look for the comps in our deal tracker. So if we're valuing a company in Illinois, what equity investments have come in? How do they value? Is it based off of revenue or EBITDA? What's the multiple? Same thing for debt coming in. And then we go to public comps. So there's really 4 vectors that we approach our valuation work on. The meat of it is all the deals we track in the deal tracker. So I wouldn't say that there's one formulaic approach. I will say that in the early days of the deal tracker, which started in January 15, nobody in the industry not only knew what EBITDA stood for in an acronym, but it didn't matter because nobody was producing EBITDA. So it was like there was no relevance to that metric, which if you ask Jeff or Frank Colombo or other people that are experts in this, nothing matters more than the cash that's generated by a company and the free cash that's generated by a company. So in the early days, it was only revenue multiples. And that got out of hand because I don't know if you remember in Florida in 2016, 17, maybe 17, 18, there was a non-operating Florida license that sold for $65 million. Non-operating. They didn't have $1 of income or EBITDA, but I want to get into Florida. To answer your question, today we have EBITDA that's being generated by a significant number of companies. Not obviously small state licensed operators, but the mid-tier, the large cap companies are generating in some cases very significant sustainable EBITDA. So we drive off of a DCF, which is based on cash flow and discount rates and terminal values. And then we apply both revenue and EBITDA multiples. It's very state specific, and it's very specific if you're vertically integrated versus you own a store. So it's really very specific to what I just discussed. There's no kind of formulaic way, but we apply both revenue and EBITDA multiples. So do acquirers in this marketplace.
Okay, excellent. Okay, moving on to the next one, Scott, since you were just speaking, I think this was more directed to you anyway, but of course, anyone chime in. When you use the term M&A transactions, are you referring to traditional term of mergers and acquisitions or medical and adult use? And that's from Anthony. Thanks for asking.
I'm not sure I understand the question. I'm going to go to the chat room so I can see it. So can you repeat it, Carolyn, as I try to look for it?
Yep, no problem. When you use the term M&A
Are you
transactions,
referring to traditional term or medical?
referring to, right.
Medical or adult use doesn't matter to M&A. There's been in the early days where most states were just medical, we had very few adult use states. There were acquisitions being made of medical only operators. Today we have whatever it is, 23 or 24 adult use states. So there's no differentiation in terms. M&A means to me, there's a buyer and there's a seller. And the buyer is acquiring 100% of the company or majority of the company, or there might be a merger, which is really a stock transaction. So I guess I'll wrap it up in, there's a change of control. That's how I would identify that.
Yep.
Okay, great. And then
We have time for one more, and then maybe Jean, you'll bring us home.
Indeed.
Okay, great. This one is from John. How much will election politics impact DEA's scheduling?
Well, let me jump in on that one. I think that's it. That impacted, the reason why we're talking about it at all. I think Joe Biden knew that there was some real potential there. And I personally think that it is weighing on the minds of the folks, no different than if your boss came over and asked you, is your current project really worth your time? I think that might affect your response when you came back with how you ought to spend your time. So I think it is a factor. I personally think that probably also helped the FDA and how it started to consider some of this stuff as well.
Thank you for that. Let me quickly summarize a few things that we heard today. Following the money, Scott, as you showed us the way, there's still a dearth of capital in 2023, but there's some hope that will improve. Disappointingly, there's no institutional capital to talk about. I personally feel some hope that has to happen over time. Very disappointing it's not there today. That's keeping a lot of things down. So cultivation retail, it's still attractive investment opportunities. We're hopeful that MSOs, the multi-state operators, will resume acquiring. We're seeing some of that now. That's pretty exciting. On the Schedule 3, the administrative process has already begun. The DEA, we're hopeful, will agree to reschedule to Schedule 3, but it doesn't sound like it's going to be frictionless or happen overnight. It's going to take time to implement. However, aren't we patient after all these years? I'm not sure. I like the way you said, Chris, watch the Federal Register to see what's going on. So we really are hopeful for some change there. It's a real game changer. We also know that more and more states are adopting both medical and adult use. And it looks like this year, Florida, Pennsylvania are doing some really anticipated adult use legislation. On intoxicating hemp, looks like D8 and D9, it's kind of up in the air. Chris thinks that the hemp bill people are watching it. We've heard otherwise. Should be interesting. There's lots of interesting and great products out there. And thank you, Scott, for taking us through some valuation metrics. That was really interesting. So to Scott and Chris and Jeff, thank you so much. To our audience, thanks for tuning in with us today. And we hope you'll come back for more, because every month we plan to continue some really interesting topical subjects like this with some real pros. So join us again and write us if we can help you make some traction. Thank you so much. And thanks, Carolyn and Guillermo. Thanks so much.
Thanks,
Good night.
everybody.
Thank you.